viewers, again as usual I got some call and video making got interrupted. So we were discussing about earnings yield method. As you are getting all your earnings as dividends, definitely your share price also is impacted by that. So therefore EPS divided by MPS or EPS divided by NP is taken for earnings yield method. Lastly, we have realized yield method. What is realized in all these cases, girls? We are using dividends which we are going to get in the future. Realized is something what you have already got. Here data, the past data is taken to calculate your cost of equity. The assumption of this method is that future is very uncertain. You cannot predict your future income accurately. We don't know this year we'll get profit or not because of the pandemic. Next year also we don't know whether company will make profit after recovering from this pandemic and whatever is the economic situation. So to calculate the cost of capital, whenever there is uncertainty, future becomes uneven, or when predicting future is not possible. In such a case, taking future income to calculate cost of equity is not possible, and hence past year dividends are taken to calculate cost, and therefore the name is realized yield method. What you have got already earlier, whatever you have received, that is taken as the basis. So here realized yield method will be actual average return which you have got in the cost, which you have got in the past, and it will be dividend plus gain, both are considered. What is this dividend plus gain? I'll tell you simple example, girls. In the 2015 maybe you would have received 20 rupees dividend per share, plus let's assume that you invested in the company in a share for 100 rupees and you sold it for 120 rupees. So here capital gains for holding share you have got is 20. Both are considered. Gain is nothing but the capital gain, the incremental sale value what you get from your investment price, and dividends whatever you have got, both are considered to calculate your actual returns in the past, and hence the name is realized yield method. So whatever you have got earlier, that will be taken. Girls, you know that in case of equity share capital there is no mandatory or anything to pay dividends. It does not mean that it is free of cost. It need not pay anything. No, to perform well in the market, to keep the market value higher compared to that of their competitors in the market, any company has to pay dividends. Only then investors are also motivated to invest in company share, and then it is traded at higher value, market value, or wealth maximization at the later stages can be achieved. Therefore calculating cost of equity capital is very significant for any firm. After calculating cost of equity, the last source which we have is the cost of retained earnings. You might ask me, ma'am, for your preference, we have preference shareholders who are investors. For equity, we have equity shareholders. For debentures, we have debt holders. But to whom this retained earnings belongs? Why should we calculate the cost of retained earnings when we have no cost involved in raising funds? The logic is not like that, girls. Instead it is like this, where whenever you are raising funds from retained earnings, whenever you are retaining your funds, as you know, I showed you here that whatever earnings you get, it will be bifurcated as dividend per share and the retained earnings. It was shown in the earlier video. So retained earnings represents the sacrifice made by equity shareholders. Your shareholders, they are sacrificing their today's dividends in the hope of getting better returns in the future. So this retained earnings basically belongs to the equity shareholders of the firm who are the owners of the business. Today they are sacrificing their dividends in the hope of receiving higher dividends or higher returns in the future. Therefore this is the opportunity cost. This is not your actual cost, instead it is the opportunity cost. You have missed the opportunity today in the hope of getting better returns tomorrow. So, this calculation of opportunity cost goes like this: KR equals D1 divided by MP plus D. Yellow ನೋಡ್ದಾಗಿದೆಯಲ್ಲ ಅಂದರೆ this formula is used in case of cost of equity share capital calculations, but this formula will continue. Again, ಇದನ್ನ ನೀವು ಡಿವಿಡೆಂಡ್ ಆಗಿ ಕೊಡಬೇಕಿತ್ತು, ಕೊಟ್ಟಿಲ್ಲ ಅಷ್ಟೇ. ಸೊ ದ ಸೇಮ್ ಫಾರ್ಮುಲಾ ಹೋಲ್ಡ್ಸ್ ಗುಡ್. ಸೊ D1 divided by MP plus G. This formula will have continuation of into 1 minus tax. Why into 1 minus tax? There is dividend distribution tax. Whatever dividends you receive, you need to pay tax on that. So therefore into 1 minus T into 1 minus B. What is B? B for brokerage charges. Whenever you receive dividend, there are brokerage charges involved which you need to pay for the brokers into brokerage cost. That is taken. So to simplify your formula, it's written like this. So this part is cost of equity, as I told you. So KE into 1 minus T into 1 minus B. This will tell you the cost of retained earnings. I hope you have followed the calculation of each source of capital. In the next video, I will discuss about calculation of WACC and WMCC. Please try to learn everything properly. Conceptual clarity is required 100%. Put your efforts. If you are not able to follow anything, there will be online class on Wednesday if I am not wrong. You can clarify your doubts with us. Thank you.